Tighter conditions in these markets serve as a warning of reduced liquidity and the potential for broader market disruptions. This is an article from Yahoo Finance that states on the headline, the Fed may need to act as potential trouble brews in a key corner of the financial markets. And you can see this chart in a better picture right here. In fact, an even better scale is right here, showing scarce liquidity. Throughout this article, you can read that banks are actually worried of tighter liquidity concerns. What we're seeing are Fed injections regularly, daily, recently, overnight repurchase agreements. This chart has been going wild. And today we got some news that affects the markets that kind of coincides with what we've been seeing. And it is the ADP non-farm payroll, the jobs report, dropping minus 32,000. When it was estimated to have a slight increase, we actually had a huge decrease. What does this mean for the markets? Well, first of all, it means that the Fed can cut rates. They're almost guaranteed to cut in December. So that is bad for the dollar, which theoretically should be good for stocks. Yet stocks aren't rallying off of that. Why is that? Well, the XY is dropping, yields dropping. Good for gold, good for silver, should have been good for markets, kind of, except this all indicates a recession environment. It's not so much a we cut and go to the moon, it's more like shit, we need to cut. What is good, Lottery Stocks fam? I guess that's the intro. We're going to talk about a lot here. Watch it till the end of the video. Like the video. Subscribe to the channel. Turn post notifications on. I appreciate all the support that you show. And make sure to drop a comment down below to engage the algorithm. Share the video. Just try and crank this out because YouTube tries to shut down these videos. And they also don't really help. So we have these liquidity concerns in the market. And very similar to what we saw when the market was on thin ice and ended up crashing lower. And then we see a guaranteed rate cut. Yet even on a guaranteed rate cut, the SPY is trading flat or somewhat red on the day. There's a couple of things I want to talk about. First of all is what can affect it today, and that's Trump making an announcement at 2:30 p.m. It's an hour and a half before the market closes. We are going to see a crazy power hour today. Once it chooses direction, it will likely follow that trajectory, and I'm curious to see what Trump is going to say later on today. Also, Powell. Powell is going to be replaced next year. And this, in my opinion, also, whether it's good or not, will cause uncertainty. There will likely be a more dovish Fed in there, but he has been in since 2018. Now, you have all of this uncertainty for these markets. We also have the SPY rallying off of decreasing volume. So decreasing volume with a higher price, liquidity concerns indicates, once again, floor is getting weaker. The weaker these liquidity concerns, the weaker this floor. And that's what we're seeing. So we're going to be watching for that. The SEC just in is blocking leveraged ETFs, 3 to 5x leveraged, due to recent volatility in markets. And that's exactly what this article was stating. At the bottom of this article, you can see somewhere it said, let me see, pressure on the markets been concerns that liquidity strains may keep despite efforts of liquidity in the markets. There was somewhere where it was talking about market liquidity and possible shock in the market right here. Tighter conditions in these markets serve as a warning of reduced liquidity, potential for broader market disruptions, which is exactly kind of what I'm preparing you for. Yahoo Finance is now agreeing, looking at the same charts we're looking at and stating that banks are in trouble and that we're in a spot for major disruptions. Yet a lot of people aren't paying attention to this. So once again, lines in the sand, 678, 684. We're ping-ponging back and forth. If we break 678, that's easy puts, in my opinion, to 674, which is the bottom of this descending parallel channel, which I had to fix because TradingView loves to mess with my charts. So we're watching these levels And if you break above 684, you go to 686. Bitcoin's getting a rally, and I actually think Bitcoin is going to continue to temporarily rally up to 98,500. This is the short-term target on Bitcoin and a possible rejection point. We are going to be watching that very closely. Speaking of Bitcoin, $11 trillion Vanguard will now allow clients to buy crypto ETFs starting tomorrow, which is huge. Plus, Bank of America officially recommends clients put up to 4% of their portfolio in Bitcoin and crypto. That is also very important and bullish for Bitcoin. Quick coffee break. MicroStrategy, MSTR, it's up 2.7%. Is Bitcoin going to save MicroStrategy? If I had to guess, probably not. But MicroStrategy is down 70% or so from its peak. If we end up climbing, watching for a rejection again, 227 or 250, which would coincide with a possible rejection on Bitcoin. Microsoft absolutely getting slaughtered. Yes, they had some negative news today, but we've been calling for this 457 level. We broke this floor, came up, retested it, and could not hold. This is really bad for Microsoft, and it also indicates what could possibly happen with other blue chip companies or the Mag 7, which would affect the SPY as well. Again, if Bitcoin or crypto gets liquidated from the carry trade, which will kind of bring up the yields in a second, then the next thing is big tech, which is Nvidia, Microsoft, Apple, Amazon, Tesla, Google, right? All of those will get liquidated. That will affect these markets as well. So again, one bad catalyst can trigger a sell-off. And as of right now, we're all riding on hope into December 10th for Powell to save these markets. Watch the direction we go into December 10th. I would like a bleed and then Powell to save these markets personally. But, maybe we climb, chop trade into it, and then get smacked at 700. See what happens. We will continue to reevaluate. Michael Burry, he added something into his profile picture that a lot of people are talking about. And one is AMC's chart with an arrow pointed right at the peak. Let's see. There are other articles. It says, sell, global banking crisis. It also says, as I write this, Dow Jones has lost 35% in 2008, more than in any year since S&P 500 is down 38%. NASDAQ is down 38%. When I looked, he had shorted Amazon.com. Why is he putting these specific articles in his bio? I'm not sure, right? But we are seeing specific ones, and I don't have the interpretation of this, that correlate with kind of what we're seeing. Global banking crisis, I think we are seeing. We actually have been talking about this date in the past. AMC's chart in this photo, I'm not really sure what this is going towards or what this is hinting at. I would love your thoughts in the comments down below. I haven't seen much theories on X, only posting that he's changed it and saying, oh my God, he put AMC's chart in here. But I would love to hear your theories or interpretations in the comments down below. I agree with this. I don't know if I agree with what's following this, but maybe he's hinting at we're getting this, or maybe this is all a nothing burger. JP 10-year, Japan government bonds 10-year yield up to 1.9% today, continuing to go parabolic. We know how that correlates to GameStop's chart. Speaking of GameStop had a ton of call premium continue to flow in right now, and as the price rallies, we will see a gamma ramp form. We're up another 1.3%, trading at $23.11. Take a very good look at this. You know what? Actually, I'll just duplicate the chart. I'm just going to duplicate the chart for you. Jump on the 4-hour. That way, you can compare what we're looking at. This back here in March, April of 2024 is identical to what we're seeing here, except at a higher high, looking to build another squeeze out of it. And I am very excited. And this also coincides with maximum pressure on swaps that were and have been used, in my opinion, to keep these plays down. It's a complicated system that I can't fully wrap my head around, and I'm not claiming to be able to, but this is exactly the pattern that we are in. What does this indicate? It indicates up. That's all you have to know. It indicates up, and I'm very excited for that. GameStop warrants is the big elephant in the room that we have been talking about. It's gaining volume recently, and I said right around 320 that, hey, after we got this gap in the chart, hey, I doubt at any point GameStop will come back to a $3 warrant. And now we are on a runaway train up to 425, coming all the way up to 440, the highest it's been so far. And this is ultimately just looking very good for GameStop's stock price. AMC looking very good as well. It is in the exact setup that it loves to do, and we've talked about it. And I mean exact because we just got this little cool off. So if GameStop is on the line of this huge move higher, right? If it's on the line of this huge move higher right here, AMC is too, and I can show you what I'm seeing here. It's very simple. I showed it in the other video that I uploaded, but maybe you weren't watching, or maybe you want to see it again. It's exactly how AMC trades every single time. And it's this U recovery with a little bit of a cool off, almost forming a cup and handle before it squeezes. And you can even look at it from a bigger scale, right? You look at the June rally, same thing. This U form before it squeezes, or you can even look at it as U recovery, retrace. Every time we're at this retrace, AMC loves to do this. And, you know, back here, what were we calling for? If any of you remember, we're calling for 215 to 230. And that's exactly what we saw, 215 to 230. So we got that off the chart. Now we're getting a picture perfect playbook for a move higher. And there's nothing guaranteed, right? Nothing guaranteed. Both of these can fall off a cliff tomorrow, and that's the sad truth of it. But am I betting on that? No. I'm betting that these go up, and there's nothing telling us yet that they will go down. Overall, that is basically the update for today's video. The main thing today was the jobs report and the continued stress in the banking market. We're watching the SPY very closely. It's on thin ice until we get to the Fed meeting. Here's the thing. We know we're getting a cut, right? We know we're getting a cut. But if Powell isn't continuously dovish coming into the new year, then it's going to be a big problem. You know what else is a big problem, actually? If Powell, so we know we're getting a cut. That's a check. If Powell doesn't say any guidance or say, yeah, we need to be more dovish for 2026, boom, beginning of 2026, then that's bad, because that's what we need for these markets. So we need quantitative easing. And this also coincides right here, late December. What is late December? Well, in this article, in the article about the banks that we talked about, they actually talk about how the liquidity, that the signs of widespread stress that we're seeing, right? Actually, this one says not a sign of widespread stress. However, funding conditions, it's saying towards, let me see, towards the end of the month. Let me find it here. This looks like to us, this to us looks like the repeat of dynamic seen October month end. Another word, development. It's for stress, like the days that followed October. Funding conditions are small shifts in supply and demand can create more volatility in money market rates. Let me see. We wouldn't be surprised right here. We wouldn't be surprised to see similar activity at future month ends unless the Fed starts adding liquidity through open market operations. That is so important. We wouldn't be surprised to see similar activity at month ends because of the liquidity concerns that we are seeing. Well, what did we see at the end of October? October 29th, we saw a peak in the market. Following that, what did we see? Well, right into the first week of November, a 4% drop in the SPY, followed by a total of a 6% correction in the SPY. If they are not going to be surprised at month-end similarities in these markets, then you can expect Powell to say F you to these markets as a possibility and us ultimately crash into the new year before possibly rallying. All a possibility. All a possibility. But overall, that is it, guys. Make sure to join the Discord. Top link in the description down below. Check those links out. I love you all. God bless. Lottery Stocks out.